All right, everybody, welcome back to Eco Wealth Lab. You guys ready for another deep dive?
I hope so, because we got quite a bit to cover today.
Oh, yeah, lots to unpack in just the past 24 hours alone.
Definitely a lot going on.
So before we get started, make sure you hit that subscribe button and check out our previous deep dives if you're just joining us.
Absolutely. We've got a whole archive of crypto insights waiting for you.
All right, so let's dive in.
Let's do it.
Buckle up, everybody, because things have been pretty wild in the crypto world lately.
Wild's one way to put it. Yeah, definitely been some big swings.
Huge. First up, over $1.35 billion liquidated from the crypto market in just the last 24 hours. That's a serious chunk of change.
Yeah, that is not a small number. Definitely got some people's attention.
Big time. And some of the biggest drops were XRP and SOL, both down 14%.
Ooh, yeah, that hurts.
You wake up, you see that in your portfolio, and it's like, oh, man.
Not the best way to start the day.
But here's the thing. Amidst all this panic, there's talk of a potential sentiment-driven reversal.
Yeah, it's interesting, right? Like, could a sudden shift in how people feel about the market actually bring buyers back in?
It's kind of like a self-fulfilling prophecy almost, if enough people believe things are going to turn around.
It could actually happen. It's definitely a psychological game out there.
Oh, for sure. Speaking of drama, a single Ethereum whale on Sky got liquidated for a massive $106 million when ETH also dropped 14%.
Yeah, that's a big one.
And apparently this set off a whole wave of what they're calling mass DeFi liquidations.
Yeah, basically when one big player gets wiped out, it can trigger a chain reaction.
Like dominoes.
Exactly. And it shows you just how interconnected and leveraged some parts of the crypto world are.
Yeah, one domino falls and
Boom, the whole stack goes down.
it's definitely a high-stakes game.
No doubt about it.
So looking at the bigger picture, $240 million flowed out of digital asset funds, with Bitcoin taking the biggest hit. This happened around the same time there was news about tariffs.
Right, so it seems like traditional economic factors can still have a ripple effect on crypto.
They're not immune.
Not at all. But on the flip side, we saw $8 million flow into blockchain equities.
Really?
Yeah, it seems some investors see this dip as a buying opportunity, a chance to get in on the ground floor with the companies building this technology.
Interesting. So they're betting on the long-term potential, even with the short-term volatility.
That's right. It's all about perspective.
And speaking of perspective, Cathie Wood's ARK Invest made a pretty bold move, buying over 83,000 Coinbase shares worth about $13 million during this sell-off.
Yeah, that's a statement for sure. They're basically doubling down on Coin, even when the wider stock market's struggling.
What do you think that tells us?
Well, it shows that some big players still have faith in the long-term viability of exchanges like Coinbase.
Interesting. So it's not just about the technology itself, but the infrastructure around it.
Exactly.
Now let's shift gears and talk about regulations. Hong Kong's making some big moves, allowing licensed platforms and ETFs to offer crypto staking.
Yeah, they're really going all in on crypto, trying to position themselves as a global hub.
Makes sense.
It'll be interesting to see how that plays out.
Especially since here in the U.S., the regulatory landscape might be changing again. There's talk of the CFPB potentially scaling back its crypto oversight under a future Trump administration.
Yeah, which could mean state regulators and the SEC end up taking on even more responsibility.
It's definitely a developing situation.
We'll have to keep a close eye on that one.
Absolutely. Meanwhile, even with all the market ups and downs, decentralized exchanges, or DEXs as they're called, continue to gain traction.
Yeah, but there are still some security concerns. We just saw Hyperliquid get hit with a $6.2 million exploit.
Ouch. So even though DEXs offer a different way of trading, security is still a major factor.
Always. It's a reminder that innovation comes with risks, and robust security measures are absolutely essential as this space grows.
And speaking of security, there's been a rise in what are called Bitcoin address poisoning attacks.
Right. Basically, bad actors are creating addresses that look almost identical to legitimate ones.
So you think you're sending your Bitcoin to the right place.
Nope. It goes straight to the scammer, and because transaction fees are so low, it's cheap for them to do this on a large scale.
That's scary. So double and triple check those addresses, folks.
Absolutely. One wrong character, and you could lose everything.
All right, so moving on to some lighter news. Remember Conor McGregor's real token?
Oh, yeah. What happened with that?
Well, it didn't quite take off the way he hoped. It only raised $392,000, way short of its $1 million goal.
Wow. Even celebrity endorsements don't guarantee success in crypto.
Apparently not.
The market has a mind of its own.
And finally, Pump.fun, the meme coin platform, is bringing back live streaming for some users.
Really? even with all the potential risks.
Yeah, apparently so.
Well, that sounds like a recipe for something.
Definitely unpredictable.
That's the crypto world for you.
All right, so another whirlwind 24 hours in the world of crypto. We covered a lot of ground today, guys, from market dips and whale liquidations to regulatory shifts and even some celebrity token flops. Hopefully this deep dive gave you a good snapshot of what's happening out there, what stood out to you the most. Hit us up in the comments and let's keep this conversation going.
Absolutely. We want to hear from you.
And as always, stay curious, stay informed, and we'll catch you on the next EcoWealth Lab Deep Dive.
See you then.